What's up, guys? Welcome back to the channel. My name is Jaden. I'm going to be sharing with you guys today about the power of a KPI spreadsheet. This is so important for you guys because you must know your numbers if you are going to succeed with e-commerce. And this template I am going to give you guys for free. You guys can download. There will be a link in the description where you can download it. All you got to do is once you click on the link, just click on File here in the top left corner, make a copy so that way you can edit it yourself. And there's no, it's not paid or anything. It's completely free for you guys. But I'm going to walk you guys through it first of all. And biggest thing this is helpful with is, especially if you're running paid ads or whatnot, this is so important because you need to know your metrics such as your break-even ROAS. And first, all you got to do is just simply enter in these three numbers and everything else will calculate. So you're going to type in your selling price, how much you're selling your product for. You're going to type in the shipping costs, how much it costs to ship each unit of your product, and then your product cost. So that can include your cost of goods, and so your landed cost, so like how much it costs to get it from the supplier, how much it costs for your supplier to ship each unit to the US or to your customer or whatever. But just make sure your cost of goods are in there. You can also include like the average payment fee if you want in it, but for the sake of example, we just have the cost of goods there, shipping cost, and selling price. And it will spit out all these different numbers, and all it is simply the BEP. That's your break-even point. That's how much you have to make in order for you to break even and not lose money. And so your minimum ROAS is your break-even ROAS. Your break-even ROAS is so important because you guys need to know how much you need to spend and how much you need to make back on your ads in order to break even. This includes the shipping costs, product cost, stuff like that. So, again, it calculates all this stuff. All these formulas are automatic and different things like that. But it's just so important to know your numbers because you don't want to be spending money on ads and think that you're profitable, but in reality you're not because you're missing some expense. And this sheet, as well as a couple other ones I'll show you guys in this video, will just make that so much easier for you guys. It'll simplify your life so much because I didn't have this stuff when I started, and so I literally would be spending money and I would actually be losing money every single day. I didn't realize it. And so I don't want you guys to suffer and go through that pain like I did. So I want to give you guys all this stuff for free. And so I'm going to explain the rest of these metrics and then we'll go on to the other sheets. So first, the target cost per purchase. That's what target cost PP means. PP means per purchase. And so this is your cost per acquisition, and it calculates it. The 30% means this is how much you need to, or this needs to be your average cost per purchase in order for you to have 30% profit left over. And so here's the 20%. Like if you're okay with having 20% profit margin, then that's how much you can spend. And so if you spend this number, if you spend up to this number or below it, that is good. Because if you spend more than $30.97, then you're spending too much to acquire your customer, then you won't have 30% profit margin, you'll have less. So again, if you spend this number or below, so if your cost per purchase is $20, then that's even better because you have even more, you're making even more profit per purchase when you calculate this. So that's a good thing. Also down here, target cost per add to cart and target cost per initiated checkout. So usually, this is not always the case, but usually always a good benchmark is your cost per initiated checkout should be about half of your cost per purchase, and your cost per add to cart should be about half of your cost per initiated checkout. And it makes sense. You usually get a couple add to carts and then a few less initiated checkouts and then a few less purchases, and it's because the buyer drop off. There'll be tons of people who add to cart who don't initiate checkout, and something could come up, they may forget or whatnot. But so there's that drop off there, and that's just having these metrics there and looking at those can just help you to see, they're not set in stone, but it can just help give you a good idea of where you're at. If your cost per add to cart is $20 instead of $7 or $8, then it's like, okay, then probably something needs to be worked on. Maybe my landing page needs to be improved. Maybe my My ads need to be improved. Something needs to be changed and improved on. And your 2 times target cost per purchase. Usually what I like to do when running ads, like on Facebook, I will like to spend, like if I'm testing new interests, then I will like to spend up to my 2 times target cost per purchase to see, whether I'm profitable or not. And so I want to show you guys an example in just a second, but I'll explain more of that in just a moment. First, some key metrics when you're testing ads, okay? And you want to look like when you're testing new interests on day one, you want to see, okay, what is my cost per click? What's my cost per click? What's my click-through rate? And your cost per click should be $1.50 or less. That's ideal when testing. If it's any higher than that, like if your CPC is like $3, $4, then that's not good. And even the first day, if it's like that, that's okay. Like if you're brand new running ads, like this is the first day you've ever run Facebook ads with this brand, then that's totally fine. Like $3, $4, that's fine. It may take 2 or 3 days for it to level out. And it also depends on how much you're spending. If you're spending $3 a day on ads, it's going to take longer for you and for Facebook to optimize and get link clicks at a cheaper price for you. So, but it will also obviously be different if you're spending like $20 a day on ads. You'll get there much quicker and your CPC and your CTR will more level out and they'll be around this level. And if they're not, like if your CPC is very high, then that just means that your ads need to be improved. Maybe your creative needs to be improved. The image or the carousel or the video that you're using as your creative for your ad, or it could be your ad copy needs to be improved. Usually changing the creative, so the video, image, or carousel that you're using for your ad, or like the top sentence or two of your primary text ad copy needs to be improved. That's why your CPC would be low, or excuse me, your CPC would be too high. If your CPC is higher than $1.50, that's not good. If your CTR is higher, or excuse me, if your CTR is lower than 1%, then that's not good. So they're inverse. Okay. Your click-through rate is basically like how many people are clicking on your ad, how many people are clicking the call to action button or the link in there. And so if it's high, like, if it's like above 1%, that's really good. Like if it's 2, 3%, like that's phenomenal. That's really good. And you want to look at outbound click-through rate. So I'll show you guys real quick. So we're going to go on Facebook at least. You click on columns. You're going to click customize columns. You click cost per click. Okay. I forgot. Yeah, you can just do like that. CPC, cost per link click. You can also type in outbound, and you can do cost per outbound click. And we're also going to do outbound CTR, which is already enabled on my screen. So we're going to drag this up to this column, click apply. And so yeah, cost per outbound click. I found that actually like when running ads, CPC, cost per link click, and cost per outbound click are both the same. They're basically always going to show the same number, but it just helps to have cost per outbound click. But you can do either one of these. But outbound CTR is a lot different than just regular CTR or CTR all, because CTR all could mean that someone clicks on your product. It could mean that they click on your ad. They could click on the call to action button, or they could like it. They could click the see more button to see more of your text on your ad. So that doesn't necessarily mean that, like if it's 5%, that doesn't mean 5% of all people are clicking and going to your landing page. It could mean that they liked it. It could mean they commented on it. It could mean they shared it with their friend. So that's what CTR all means. It's still good to look at that to see if more people, if your CTR all is high, like 5% or higher, then usually that's a good sign. That means that people are engaging with your ad, and that means your ad is good. If your outbound CTR, like I said, is 1% or higher, that is really good. You want it to be at least 1%, your outbound CTR. If it's lower than that, then that means that, again, your creative probably needs to be improved, and the first 2 sentences of your primary ad copy needs to be improved. And remember, CPC is inverse, so your cost per click, if it's high, that's not good. your CPC, you want it to be low. You want to get a lot of link clicks for very cheap. And so if it's $1.50 or below, that's really good. Like if it's like $1 or less than $1, that's really, really good. But at least $1.50. If it's higher than that, if it's like $3, $4, then that's not good. And another thing you can do to see how your ads are doing is you can go here and check quality ranking, engagement ranking, and conversion ranking. Usually they'll be either above average, average, or below average. And if it's average or above average, that's really good. If it's below average, especially like quality ranking, then you want to make sure your ad is not like clickbait or anything like that. You want to make sure you're, you're not advertising a product that could be seen as I guess advertiser unfriendly on Facebook, and so you can just improve. And the more tailored your marketing message is to your ideal customers, not to everybody, because if you try and appeal to everybody, you'll appeal to nobody. But if it's more tailored to your specific ideal customer, then the better your quality ranking is, the better everything else will be as well. But I just wanted to show you guys those metrics on Facebook. And one more thing I do want to show you guys is the CPM. CPM cost per 1,000 impressions. It's good to look at this as well. Like I remember literally when I was starting, I had like a CPM of like $212. That is not good. That's really not good. For e-commerce, standard is like $20 to $30. So roughly you'll need to spend about $20 or $30 to reach 1,000 people to get 1,000 impressions. And you can also see it here. So it'll show on Facebook how many impressions you get. But you don't have to look at this too much. Like I said, if you're just testing like brand new with Facebook ads, your CPM will probably be like $60, $100. But as you run more ads and Facebook learns who to show your ads to, then it will improve over time. Like literally my CPMs now are like $5 or something. Like they're super cheap. They're ridiculously cheap. And you will get to that point as well. I just wanted to show you guys that real quick because it's so important, because this has really helped me with running Facebook ads and ads online. And just some few reminders down here as well. If an ad set gets purchases, while you're spending up to your 2 times target cost per purchase, that's a very strong sign. That's very, very good. Like things are good. If an ad set spends up to your target cost per purchase without add to cart or initiate checkout, then turn it off. And again, you can use your own discretion as you go along, but these are just good reminders. If you guys are brand new to this or haven't really ran Facebook ads before, this can just be a great guideline to get you started. But in certain times, you may let it spend up to 2 times target cost per purchase, even if you haven't gotten to add to cart or initiate checkout. But I would just stick with these guys. Stick with these guys, especially if you're not sure what to do. Just stick with these, go with these, because these have served me so well. They've helped me so much run profitable Facebook ads. And so don't confuse yourself. Don't overwhelm yourself. Just stick with these guidelines and go from there, and you can learn as you go along. And then if an ad set spends up to about 2 times target cost per purchase, in this case it's $61.93, without a sale, then you kill it. Then you turn it off. And I'll show you for the sake of example, like let's say, we're running ads for humidifier or whatever. We have our interest here we're testing, US only, starts today. So it would have started, let's say, at midnight. But let's say 6 days has gone by, because in order for us to spend, let's say we're spending $10 a day on Facebook ads. So $10 a day is the budget. So that means to spend my 2 times target cost per purchase, we need to let our ads run for 6 days before making a decision. And and so that means on day 3, your target cost per purchase is $30. On day 3, you'll see if your ad's got an add to cart or an initiate checkout or a purchase. If you got a purchase, really good, keep it running. If it hasn't gotten an add to cart or initiate checkout, turn it off. And then let's say it has. Let's say you got an add to cart and initiate checkout. Then you let it run for the 6 days, the full 6 days. Spend, once it's spent its 2 times target cost per purchase, then that's when you can turn it off. You can assess the performance. If it got a sale, great. Then you can actually leave it running. If it didn't get a sale, then you can leave it off and then start testing new interests. But guys, that's a simple way for interest testing or audience testing on Facebook. That's kind of like, it's a little bit off topic from this video, but I just want to share that with you guys because it's so important. And I wanted to show you guys how this spreadsheet really helps you with testing Facebook ads. But there's a couple other things I want to show you guys as well. And first thing is calculating your ROAS. Okay. So like I said before, let's say we spent our 2 times target cost per purchase. So we spent exactly $61.93 for the sake of example. You don't have to be so, so strict about that. You can, if it spends a little bit over, like $5, $10 over, it's fine. It's no problem. But let's say we got a sale. So in this case, our selling price, our product price is about $80. And so we got a sale. $79.95 is our total revenue, and we spent $61.93. So to calculate your ROAS, your return on ad spend, all you got to do is divide your revenue. So in this case, $79.95 by your total ad spend, so $61.93, and that is your ROAS, 1.29. And so you then check and see, okay, is the ROAS that I got over the past 6 days, is that higher or lower than my minimum ROAS? If it is higher than your minimum ROAS, then that is good. That means you are profitable. If it is lower than your minimum ROAS, then that means you are unprofitable. That means you need to turn this ad set off and then test a new interest. If it was profitable, if it was higher than your minimum ROAS, then you have profit, you have wiggle room. That means also your target cost, or that means your cost per purchase will also be $30 or lower. So these things go together. If you're profitable, like if your ROAS, for example, is like a 3.87, then that means your cost per purchase will also be very good too. It will be lower than, in this case, $30. And that means you have profit. You've made profit from that. And the reason why, this seems like it's good because, our revenue is higher than what we spent, but we have to take in consideration the costs associated with fulfilling one product. There's the cost of goods that your product has. There's also the shipping cost and the payment processing fee that Shopify Payments uses, or Stripe or PayPal, whatever payment gateways you are using. So those you also have to keep in mind when calculating your ROAS. Just because this number is higher than what you spent doesn't mean you're profitable. You have to keep track of the expenses that go along with it. And I'll show you guys in just a second how to keep track of those expenses very easily. But one more thing I want to mention is, so in this case, we got 3 sales, so $79.95 times 3 is $239.85. So let's say we spent still $61.93. So, if we divide those two numbers, then our ROAS is 3.87. That's really good. That is a lot higher than 1.45, our minimum ROAS, or our break-even ROAS. And so that is our gross profit. But remember, net profit, like I said earlier, you have to take in consideration. You have to subtract the shipping costs, the cost of goods, the monthly app costs, the payment fees from each unit in order for you to get your net profit. And here is how I like to keep track of my expenses. I have this entire spreadsheet for you guys that I'm going to give you guys for free that you can use, where it will automatically track all of your expenses. All you got to do are fill in the columns that have a border here and that are gray. So these 3 columns, this column, and then these 2 columns, all you got to do is fill those in every single day, and it will automatically calculate, okay, here's your net profit for the month, here's your gross profit, here is your daily ROAS, here is your cost per purchase. And it's incredible, guys. It's incredible. And I first want to show you guys, we're going to go just down the columns. We're going to go through the list, and I'll walk you guys through it. So first thing, this is creative for May. Really the only thing that matters is just the dates here. So obviously if you're watching this and it's not May 2023, then you'll just have to change the dates here. You can easily do that. You can just go here. If it's June 1st, then you can change it and go from there. But sake of example, we'll pretend it's May 2023, and yeah. So first, you're going to put how many orders you got in a day. Let's say today's May 1st, for example. Then let's pretend we got 3 orders on our Shopify store. And it's like, awesome, cool. Then we're going to write down how much revenue. What was our total revenue? So again, you add up your target or your product selling price. In this case, $79.95. So then we times that by 3, $239.85, and it also shows on your Shopify dashboard. Daily ad spend. You'll check your Facebook ads or TikTok ads, wherever your advertising platform is, and then you'll get how much you spent from the day before. And so in this case, let's pretend we spent $61.93. So then it will automatically, when you type in these numbers, it will automatically spit out your gross profit, which basically your gross profit is just your revenue minus your daily ad spend. And so excluding like the payment fees and stuff like that, you've made a total of $177.92 in gross profit. That's really good. Your gross profit percentage is 74%. And you don't have to pay attention too much to that. What we really care about is net profit over here. But I just thought if you guys want to see that, if you guys want to see how your ads are doing in terms of just acquiring purchases and how many sales you're getting roughly per day, this can be a great way to see that and see how much profit roughly you're making. And so the next thing is payment fees. So these you'll be able to go on your Shopify dashboard or on PayPal or whatever payment gateway you're using to take payments, such as credit cards. You'll be able to see then how much you're being charged per transaction. And so Shopify easily breaks it down, shows you if you go to payouts, then you'll be able to see, okay, like this past order, yesterday's order, it charged me like $2.30. It's like 2.9% plus 30 cents for US currency. If you're in a different country, then it's going to be a little bit different. But so you can look for Shopify to calculate that. I also have over here, if you're not using Shopify, if you're using like PayPal, or if you have multiple different payment gateways like Amazon Pay, PayPal, Shop Pay installments, or Afterpay, then you can use these things to basically calculate what your payment fees will be for that order. So for PayPal, for example, at least in the US at the time of recording this video, they charge 3.49% plus 49 cents in US currency per order. So let's pretend my order is $79.95, or that's how much one product costs. Then all you got to do is type it in here, and then it will automatically spit out how much your payment fee is for PayPal. And then you can just simply then type in $3.28 over here, $3.28. Cool. Then that's good. And then your daily running expenses, what these are your monthly app costs as well as other things. So if you click on cost reference sheet, then these are all your different expenses for your business. And these also can include your business expenses that are in your personal life. So like rent, you can take, I'm not a financial advisor, I'm not an accountant or anything. This is just for entertainment purposes. But different things like your electricity, your internet, if you write those off as a business expense, then you can also include them here and, say like, okay, electricity is $40, then it will divide these 3 numbers by 30 because there's roughly 30 months or 30 days in a month, and then it will divide them through every single day of the month. So instead of like having one day where you say, oh, a miscellaneous expense was $143.99, instead, I find it's a little bit easier to digest the number when it's a lot smaller. So I divide it by 30 and then boom. So basically that means you're spending about $4.80 a day through monthly app costs like your Shopify subscription. That's for the regular plan. And a Shopify app, let's say you're using Zip5 one-click upsell, then that's $24.99 a month, always starting out. So then it will automatically calculate how much you're spending based on your total monthly app cost, which is right here. And, like I said, it'll divide by 30, and then this number here will be used here so that way your expense sheet accounts for those monthly app costs. It just doesn't forget about them, because I find a lot of people forget about app costs and also their payment processing fees just because they're more technical. They're a little more complicated to figure out. But this breaks it down super easily. If you guys have a different number of expenses, you can simply change this. If you're on the basic plan, then just simply type in 29. If you don't have any Shopify apps right now, then just get rid of that. And boom, you're spending 97 cents a day basically to afford these apps. And so that's what the cost reference sheet does. You don't have to do too much with that, but it's to calculate your daily running expenses. And so your daily profit will automatically be calculated once you type in your payment fees, your daily ad spend, your daily revenue, and your total orders for the day. And in this case, it's $173.67. That's really good. That's really good. And I know the payment fee is not accurate and all that for this video, but I just wanted to show you guys that for the sake of example. And it also shows your net profit percentage. It shows then your cost per purchase, which it figures that out by basically taking how many orders you got that day and dividing it by your ad spend, or it's flipped around. You divide your ad spend by the total number of orders you get, and that's how you get your cost per purchase. That's also how the financial KPI sheet calculates it, or they do it similar to that. But the daily ROAS then is also calculated here. So instead of having to manually count it out here and use a calculator, it very nicely does it for you automatically. And again, your daily ROAS is your daily revenue divided by your daily ad spend. So in this case, 3.87. That's good. That, obviously we made more than we spent, so that's good. And these will also change, as you can see. Like the daily profit changes. If it's negative, then it will be. Actually, I'll fix this because it's showing it's green when it's negative. I'll fix that for you guys before I release this video. But for these two columns, I know they're already set up correctly. So if your ROAS is below 1.45 in this case, then it will be red. So, one ROAS right here is obviously red, but if it's above 1.45, then like in this case, then it will be green. That basically means that then, hey, you're good. Like if it's green, that's good. If it's red, then you got to work on something. And if you want to change it, because if your break-even ROAS is not 1.45, then you can change it by just simply highlight this whole column here. And then you're going to click on Format. You're going to go to Conditional Formatting. And then you're simply going to change the rule. Instead of saying greater of 1.45, whatever your break-even ROAS is, like let's say it's 1.12, then you're going to change it to Done, and it will automatically, anytime you type in anything else in these columns, it will automatically then make it green if your break-even or if your daily ROAS is higher than 1.12. But in this case, we'll leave it at 1.45. And yeah, for now. But you guys can go in here and change that for your own ROAS. But that's what it looks like. And also at the bottom here, it also calculates like these. This is like the total ad spend for the month, total revenue for the month, stuff like that. One thing is, don't pay attention to this number down here, profit this month, because we also have to take into consideration these columns here. These are refunds. If you get any refunds during the month, you can put them in here. And like I have some example refunds here. So in this case, I also added a note. So you can, like if I have a refund here of like $79.95, then I can also right click on it and click insert note, and I can say like, okay, the order number was like 1202 or something, and it was because like it broke, the product broke or something. And so you can just keep note of that too for each refund to see why they refund or they asked for a refund. The miscellaneous fees, you can do that for like if you have a new app cost that that came about unexpectedly, then you can put that in here. Like in this case, say for example, if you're using Amazon to fulfill your orders, they have the monthly storage fee, so just put that in there. But all of these will then be accounted for to figure out your daily profit or your monthly profit. And so this, like I said, this this basically takes your total profit from this month and then subtracts it from your total refunds and your total miscellaneous fees. And it spits out your profit for this month. You don't have to touch anything. You don't have to change this number at all or this formula. Again, just change the columns that have this black border around it and that are gray. So these 3 columns, this column, and these 2 columns, those are the only ones you should be changing on here because everything else does it automatically. But so that's the spreadsheet, guys. And I hope that this helps. Again, I am going to give you guys this template for free. All 3 of these for free. I will send you guys it, or it will be linked in the description of this video. But I hope this video helps because, finances are so important. Even though they may be tedious and stuff, it's so important to keep track of these things. And I want to give you guys this rather than, not help you guys with this at all because it's so important and it was something I struggled with early on, and I don't want you guys to suffer and go through the stress and the pain that I went through. So I hope that this video can help you, and I hope that these spreadsheets can help you. And let me know down below if they do. And I hope, I just asked for you guys because it took me a while to create these templates and all that for you guys to create this video. So I just asked if you guys could please subscribe to my channel so that way you guys never miss out on an e-commerce video or another. I also publish mindset videos because mindset is very important for success as well. You guys can also follow me on social media. I'm on Instagram, TikTok, and Facebook. You guys can follow me on there for more free tips just like this. But I hope this video helps, guys. Thank you so much for watching. Really appreciate you. And I will see you guys in the next video. Take care, y'all.